We have Feroze Azeez, Deputy CEO, Anand Rathi Private Wealth Management. Feroze, good evening and welcome to the show. Before I question you about the AMFI data, I believe it's your son's birthday on Children's Day. So happy Children's Day to him and a very happy birthday to him as well.
Thank you, Kavita. Yes, it's his birthday. I wish him a great future. In fact, two of my other friends' children's birthdays also. I think quite a few children know that it's Children's Day. They step into this world. So Avni and Vidur also have their birthdays. I think it's very important for all of us to understand the significance of children, because they have an influence on parents' behavior, investing behavior as well. So they give a purpose to the whole investing journey. So I'm happy that Children's Day, which marks one of the important days to exhibit those long-term goals. So I think, thank you so much for the wish. I'll convey it to him if he is not already seeing television.
All right. So since you talk about long-term goals and the motivation to stay invested, let's talk about the SIPs, which are again at a record high. Where do you think retail investors are getting the strength to stay invested?
See, I think, Kavita, what's happening is from 2013, the kind of education focus which India has had to the whole financialization concept is paying off now. In the previous 2-3 situations where there were uncertainties like 2008, 2013 and several other years, SIP numbers used to drop because people used to look at past performance and start their SIPs. If you see, last 1 year has been very turbulent time, especially for a new investor. In that space, if 10,000 crores of SIP number, which is what it was last October, transform itself to 13,000, which is, if you look at 10,500 becoming 13,000, that's about 20% growth, 23, 24% growth on the back of one of the most uncertain years, from a war to inflation to interest rate hike to crude oil. All this has happened and retail investors are strong. That's because they understand that markets will behave like this. And that's the nature of the market. And I think on the back of education, this money has come. Is why you see it growing month on month. Even if you look at it from April, which it was 11,900 to 13,000 in about 7 months, is a very healthy number.
So you think this momentum going at the same pace ahead, or you think it can slow down?
I think it is still starting the momentum.
Okay.
I think we are scratching the surface. If I project the SIP numbers 3-4 years from now, I wouldn't be surprised if it hits 25,000 crores per month as well. If you look at the 70 crore increase from September to October, it looks like a small 70 crore increase. But since this is 70 crores a month, that automatically implies almost 850 crores in a year has been committed extra. And second is, it is not just the amount of SIPs. There is about 20 lakh new SIPs which have got registered. So I personally think that this is just scratching the surface. Today we have almost 13,000 crores. If you measure it in billion and trillion like foreign investors measure it, it is almost more than $1.5 billion. And I wouldn't be surprised if this moved to $3 billion in the next 3 to 4 years.
So all encouraging and upbeat numbers here. So what people can do is just continue their SIPs. But if at all you want to know whether you should be continuing your SIP in the same fund or you want to rebalance your portfolio, you need to send us your queries. But then with that, Feroze, let's move on to our query segment, where the first query comes from Rajesh. He's a government bank employee and he will retire in 10 years currently. He says that he's been investing almost 45,000 a month in equity mutual funds. Target is to accumulate 1 crore in 20 years. So far, he's managed to gather the corpus of 20 lakh. He wants to know how much will he'll be able to accumulate, and will it be possible for him to accumulate this corpus before his retirement. The list of funds I think you have with you. So what is your recommendation? So he's a fresh investor. He hasn't invested, it seems. He's not given us the names, or do you have the names on you?
Yes. Kavita, I think Rajesh is investing 45,000, or at least intending to invest 45,000, which is a reasonable corpus, and he wants to accumulate a crore. Fortunately, with that kind of corpus and a 20 lakh rupee lump sum, even at a 12% rate, he will get to almost about 1.66 crores. So he will supersede his target. But since his time frame is 10 years away, he doubling his amount for inflation of 7% makes sense. So at 14%, he will supersede 2 crores. At 12%, he will still get to about 1.6, 1.7 crores. So it's a healthy rate and a very fair expectation, Rajesh. That's point one. Point two, to my mind, schemes like Kavita also mentioned in the previous discussion, schemes might require a relook. Equity could be a long-term asset. You may want to leave money in equity for 10, 20, 30, or till eternity, but you may not want to leave the money in the same scheme till eternity. So reviewing and listening to the show and making changes is periodically is critical. So I will recommend 5 schemes which are contemporary today, may not be contemporary 3 years hence. So you will have to have that time and wherewithal to write back to us and take some more opinion, as the dynamic landscape of investing always keeps changing. Franklin India Blue Chip, which is a good fund, has not performed in the past but has future performance possible. IT as a sector has been skewed in the portfolio, assuming value will emerge. That's the key highlight of this. HDFC FlexiCap, which is a value fund, Prashant Jain used to manage it. Now Roshi Jain manages it, who has also been a great fund manager. Kotak Emerging Equities, Pankaj Tibrewal's fund is a good start point in the mid-cap space. Invesco India Multicap, Tahir Badshah, who's the CIO, looks at this portfolio very, very keenly. So that's the 4th fund. And SBI Contra, which is Dinesh, who's the fund manager, and the CIO, Vasan, is also one of the best fund managers in the industry. He overlooking the portfolio. These are the 5 schemes with great professionals behind these 5 schemes. Why am I mentioning these names? Because every investor should go a little deep into the person behind the fund, and not knowing your fund manager is not a great idea. So Rajesh ji, as a foundation for your beginning, I'm mentioning these fund manager names so that there's curiosity for you to go dig deeper in terms of their behavior, their background, and so on and so forth. On the debt side, there is IDFC Guild Fund 2027 Index Fund, which you can definitely look at, which only lends money to Government of India on the debt side.
All right, we quickly move on to our next query from Shantan, and he's a freelancer with a monthly income of between 40 to 50,000 per month, and he wants to start investing in equity mutual funds with a target of building a corpus of 30 lakhs in next 15 years. He wants to know what kind of mutual funds would you be recommending with medium risk?
Yes, see, Kavita ji, to my mind, medium risk is more or less all equity funds. I would call them medium risk with time. They may be high risk for 1 year. They may be a little low risk on 2-year basis, but they become medium risk over a 3 to 5-year basis. So the same 5 schemes, I will not be repetitive for the lack of time. The same 5 schemes, Sayantan, please invest. If you have 50,000 rupees of a take-home salary, your target should be to save at least 30% of your disposable income into investments. So, but start with 10% of it, which is 5,000 rupees. And fortunately, you can get to your 30 lakhs with 14% return in 15 years, just with 5,000. But don't stop there. 10% is not a great savings rate. Try and expand that goal basket. Look at your dependents. If you have children, make a couple of more goals so that you stretch and get to 30% savings rate. The same funds, Franklin India Blue Chip, HDFC FlexiCap, Kotak Emerging Equity, Invesco Multicap, and SBI Contra. On the debt side, IDFC CRISIL Index Fund, Guild 2027, is a great debt fund to add to your portfolio.
Right, that will be all. Thank you so much, Feroze, for removing time and being a part of this show today.